Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 18th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. So therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. Across the pond, we got final CPI numbers right in line with expectations at 0.2%. We also got the core CPI, which is Consumer Price Index, at 0.9%. The core CPI takes out autos and different volatile markets that aren't very consistent, like the auto industry has a cyclical type season. They also got the Philly Fed manufacturing here in the United States came in slightly better than expected at at 2 versus the expected 1.4. Unemployment claims increased a little bit, which means people are starting to, unemployment claims decreased a little bit, which means that less people are looking for a job. Whether or not that's good or not is yet to be seen. And then we also had Dudley speaking today, which didn't really put a whole lot of light on it. Yesterday's FOMC minutes came out and showed that they are going to be very data dependent and don't see any rate hikes soon. So that's caused the overall markets to really start pushing, wanting to push to the upside, as you can see here with crude oil pushing higher, and natural gas storage. We had a drawdown to 22 billion cubic feet versus the expected 26 billion cubic feet. So anyway, with crude oil futures, we have them pushing higher by about $1.20 right now, up into the 48 handle, looking to want to test that $50 area, which is right in line with the value area high here, as you can see. Onto the overall gold pushing higher as well, up $7 on the day, just kind of stuck right in this range bound area. Like I said, it's very comfortable at 1350 area. Bonds were a little bit higher just a little bit ago, up 9 ticks on the day, but cats and dogs living together right now with the overall markets. The NASDAQ looks like the S&P or the equities have just pushed into negative territory. NASDAQ down almost 4 points right now. So it looks like the flight to quality might be happening. Earlier this morning, we had looked like a bit of a jubilation in the markets as it kind of spilled over from the FOMC minutes, not raising rates. That's tendency to be good for the overall equities. As you can see, E-mini S&P is just slightly higher on the day. This is the 15-minute breakdown on the E-mini S&Ps. As you can see, we've really kind of come off of those highs that I was talking about getting ready for this. We were a little bit higher, but in the past 25 minutes, 30 minutes, really kind of sold off to unchanged for all intents and purposes. All right, so I did end up getting off my Cisco order yesterday, and it was the September 45, 50, 55 iron butterfly. So basically, I bought the 45 puts to define the risk on the 50 puts that I'm short, and then I sold 50 calls and defined the risk by buying 55 calls. And I did that all for a credit of $2.55. A couple of things that I'm going to be looking forward ahead to doing are on earnings. Oh, one thing I did want to mention is Tesla just had a news release that Tesla Model S caught on fire and burnt to the ground in France. All 3 passengers are safe, but at the end of the day, Tesla is immune to anything like negative earnings and I guess car fires. If that was a U.S. manufacturer, it would probably be down 10 to 20% on the day. But Tesla with Teflon continues to push higher. On to the earnings trades. There's Gap earnings. I'm going to probably play these. I don't know. There's not a whole lot of premium in Gap, so I may shy away from this. Foot Locker definitely off the books for doing that, but Gap, I just want to kind of play to the downside. I just think retailers are suffering right now. And Deere, I am probably going to play again to the downside because with the commodities like soybeans, and corn, wheat, all of those being suppressed levels, farmers just are not able to go out there and buy their fancy toys. Farmers love to buy toys and are going to be the ones that die with the most toys. But in this season, there's just not going to be a lot of profit potential for them to go out and really add to their fleet of toys, if you will. So I'm going to be playing this one to the downside. That's about all I got for you guys, other than on Friday we've got a webinar that's going to be on long put spreads or long put butterflies. That's going to be a really good one. Stay tuned for that. You can go to protraderstrategies.com and sign up for that. Also, I'm doing a series on pro trader hacks, basically, and what that does is really going to shorten your cycle of trying to figure out the nuances with the different options. All right, so check that out, protraderstrategies.com. That's all I got for you today. If you can't take that, take it easy.